Before we start this video, do like and subscribe to our channel and not miss on any updates.
Now, this particular chapter on accounting for branches, including foreign branches, one is this separate discussion altogether. What is one challenge that you face in this particular chapter? I wanted to know from your side, and before I actually get into the discussion on what is to be done. What is that one challenge you face in this particular chapter? Of course, it is a lengthy chapter, one of the lengthiest chapter, I would say. But what are the challenge? Apart from that, it is lengthy chapter. What are the other challenges? Identifying which method to use in some questions. Okay. Confused between stock and debtors method. Okay. Same. Okay. Fine. Now, as far as examination questions are concerned, this foreign branches is more simpler. The reason why I say this is simpler because you just need to convert the balance sheet or trial balance, prepare the balance sheet or P&L. You can handle it more easily and comfortably. When it comes to the domestic branches or inland branches, we have dependent branches and independent branches. Under dependent branches, we have debtors method, stock and debtors method, trading and P&L method, then wholesale branches. Right? Now, when we do this revisions, what we'll do is how to identify which method to follow where. And the problem is cost method is there, selling price method is there. So cost method, 3 methods, selling price, 3 methods, wholesale, this method, branches. So many varieties of questions are there, and sometimes you are lucky when the examiner says this is what you have to prepare. You'll prepare that and you'll do it. But sometimes it is difficult because they will not say you have to determine. Okay, right? So whenever you get a question on branches, if it is a domestic branch, even foreign branches, it is slightly easier than you do. First, you have to figure out whether it is a dependent branch or an independent branch. Dependent means the branch is dependent on the head office for everything. Goods will be supplied by head office. Prices will be determined by the head office. Collections has to be remitted back to the head office. All the decisions are based on head office. Head office will treat as if, so for example, if you consider the body, okay, this hand is fully dependent on the brain. The way brain directs, the hand will move, right? So this is a dependent branch, something like an integral operation. When we come to foreign branches, we have integral foreign operations, non-integral foreign operations. When it comes to domestic branches, we'll have dependent, fully dependent on the head office. And independent branch is basically the branches which take decisions on their own, which take decisions of purchases on their own, which decide some of the selling prices on their own, and they also maintain independent accounting records. So if it is an independent branch, they will have their own accounting records. If it is a dependent branch, the records are maintained by the office. Now, when it comes to dependent branches is where we have more varieties to handle, and that is where we get confused. First one is debtors method, then we have stock and debtors method, then we have trading P&L method. This is easier. And this, we have wholesale branches method, somewhat extension of these two methods. Okay, somewhat an extension of these two methods. First, we will understand logic of this debtors method. Though it is a revision class, though it is a fast track revision class, I want you to understand the logic of debtors method. Once you understand the logic, solving questions in the examination will be much easier. Okay. Now, we have head office, we have branch. And for understanding of logic, we'll assume all the transactions head office to branch is happening and cost basis only. Head office and branch. Branch has opening stock of 1,000. Branch has opening stock of 1,000. Debtors. When I say debtors, this debtor is the branch debtors. Debtors of 500. Head office send goods to branch at cost of, let us say, 20,000. Branch sold goods, let us say 15,000. That is what they could sell. And closing stock, we sold goods of 20,000. We send goods of 20,000. Closing stock, if you have to say how much is the closing stock, let us say closing stock is 10,000. Okay. So branch, what they have done is they had opening stock of 1,000. They got from head office. Head office sent goods 20,000. They sold something for 15,000, closing stock is 10,000. Now, how much is branch profit? Let us first calculate independently. Okay, how much is branch profit? Let us first calculate independently. This head office sent goods, it is like my purchase. If I am a branch, it is as if I have purchased this. So if I have to calculate the profit, what will I do? I will say opening stock 1,000, opening stock 1,000, purchases, assume for a moment, just for the logic purpose, purchases 20,000, sales 15,000, closing stock 10,000. What is the profit? Profit, you would say, sir, 15 plus 10, 25, 25 minus 21, 4,000 is the profit. 4,000 is the profit. Now, because the branch is not maintaining independent record, the head office calculates this profit of 4,000 by using something called as debtors method. Now, when I say debtors method, I am not referring to this branch debtors. When I say debtors method, head office treats this branch as a debtor. Now, so what is the meaning of head office treating branch as a debtor? Head office simply says, branch, you are like my customer or you are like my debtor. Means you have to pay me money. Why will the branch pay you money? Because head office has sent goods to the branch. Head office has sent maybe sometimes cash to the branch. Okay. Head office has, incurred some expenses for the branch. So head office says, Mr. Branch, you are like my customer. Not exactly a customer. You can say you are like my debtor. You are like my debtor. When I say debtor, what basically means is I will apply the principles of whatever I give it to the branch, I will debit it to the branch because I have to receive that from the branch. So think of it. This opening stock of 1,000 is there. This opening stock of 1,000 belongs to head office. This customer outstanding of 500 also belongs to head office. This customer outstanding of 500 also belongs to head office. Okay. Closing stock of 10,000 also belongs to head office. So basically head office is saying, branch, as on 1st of April of this year, you have to give me 1,000 plus 500, 1,500. Now, when it comes to closing stock, when it closing balances, let us assume closing balance of, I'm writing it separately. We have debtors account. This is, you can call it memorandum debtors account. This is debtors of branch. So you had opening balance, debtors of branch 500, to sales, assume for a moment everything was on a credit basis, 15,000. By cash. This by cash is being prepared by the branch. This is a rough work of the branch, not of the head office. I'm just telling you the logic. By cash, branch cash, let us say the customers, they paid 12,000. By balance, if I have to do 15,000 plus 500, 15,500 minus 12,000, 3,000. Now, this 3,500 is the closing balance of debtors at the branch. Whom does this belong to? Head office. Head office says, branch, you have to pay me 3,500. You have to pay me 3,500. Okay. Then, this cash was collected 12,000. This cash was collected 12,000. Assume there are no further expenses. There are no further expenses. What did branch do? This is the branch cash account. They collected to debtors 12,000. They sent 10,000 to head office. This is 12,000 by head office, 10,000 by closing balance 2,000. Now the head office says you have to pay me 2,000 this cash also. You have to pay me 2,000 of cash also. Now, if I follow the debtors method, in the debtors method, when I say debtors method, branch is treated as a debtor. So I will prepare a branch account. In the branch account, I will say at the opening of the year, branch, what are the amounts that you have to give me? So here we see that branch has opening stock of 1,000, debtors of 500. So I will say to balance brought down, opening stock 1,000, debtors of 500. Then I sent goods. To goods sent to branch, or you can say to purchases to trading, whatever the nomenclature you want to use. We have sent goods of 20,000. This also I have to recover from the branch. So I will say, branch, you have to give me 20,000. Then what did the branch give us? Branch remitted money. The sales that the branch is doing is independent. Think of it something like an agent. Okay, something like an agent who is holding out money. Okay, so branch has given us money by bank. Let us say we received money. How much did they remit? 10,000. They remitted 10,000. Now, this is all the transaction. I'm not adding more layers of transaction. If you see the balance carried down at the branch level, what does the branch has to give me? Closing stock, debtors at the branch, and cash at the branch. What is the closing stock? Closing stock, we said, is 10,000. Debtors at the branch, we said, 3,500. And cash at branch, we said, 2,000. This is the closing asset with the branch. This is the opening asset with the branch. This is the asset transfer to the branch, or there could be any other expenses which we incur in behalf of branch. And this is the money received. Now let us see what is the total. This is 10 plus 10, 20, 22, 22 plus 3, 25, 500, 20,000, 1,500, 21,500 minus 25,500, 4,000. This 4,000 is what we say profit. Or if you have to further simplify, think of it like opening capital plus capital introduced minus capital redeemed and the closing capital. The difference is profit. This 4,000, same thing we got here. Okay. So the logic behind preparation of this, debtors method is branch is my debtor. If I send something to the branch has to pay that money back to me. If I incur some expense on behalf of the branch has to pay that amount. If branch gives me money back, when I receive money from the customer, I'll credit the customer account. I'll credit the debtor account. Same thing I will do. Branch, I will credit when I receive the money. If I send money, I will. And whatever are the closing assets, I will see. So basically, opening assets plus assets sent. When I say assets sent, goods which are sent to the branch, minus money received or minus asset received, and then you have this closing balance minus closing balance. If you do that, the balancing figure becomes your profit. Okay, is the logic of this debtor method clear? Clear? Okay. Clear? Yes. Perfect. So this we have already discussed briefly. You can have a look at it. So this is the branch account which is followed when we follow the debtors method. Now, sometimes students get confused as to what is this debtors method. This debtors method basically means branch account is a debtor account. Okay, and this debtor, this petty cash, these are whose debtor? These are branch debtors. So head office treats branch as its debtor, branch has its other debtors, its own customers. Okay, so what we'll do, we'll take the opening balance, cash, stock, debtors. Whose debtors? Branch debtors. Petty cash, any other assets or any asset lying in the balance sheet. And if there is any liability, you'll put it on the credit side also. That is also you need to keep in mind. Okay. Then if we send goods to the branch, we'll debit branch account and do this. If we pay some expenses on behalf of the branch, we will debit the branch account to bank. Then if money is received, we'll credit it to bank. If there are returns to head office, by return to head office means goods return back, closing balance is this. So if the credit side is total, if the credit side total is greater, you have the surplus profit. If debit side total is greater, then you have a loss. And we have seen how this profit and loss is matched when we do the normal trading P&L account on a rough basis for the branch accounts. Okay. Let's look at this question. Buckingham Bros, Bombay, have a branch at Nagpur. They send goods at cost to their branch at Nagpur. Direct purchases are also made by the branch for which payments are made at head office. So head office handles that. All daily collections are transferred from branch to head office. So whenever you see this, daily collections are transferred, head office make the payment and all of that, it is an indication that this is your, what do you call, a dependent branch. And whenever you see the dependent branch and they have said data's method, when I say data's method, branch, I'm repeating once again, is my data. Branch is my data. So I'll have opening balance, I'll have closing balance, and whatever are the transaction between the head office and the branch will be recorded here. Please remember, whatever transactions are happening between the branch and its customer are not recorded. What we are bothered about is the opening balance, the closing balance, and transaction between the head office and the branch. We are not concerned about transactions between the branch and its customer. So if the branch gives some discount, if the branch incurs some bad debts and all of that, no need to worry about it. All right. Okay. Opening balance, impressed cash is 2,000. Sundry data is 25,000. Stock transferred from HO 24,000. Direct purchases 16,000. Cash sales 45,000. Credit sales 130. Sales, we will not account for it directly. Only when the remittances that happens, that is what we will consider. Direct purchases 45,000. This is a transaction between the branch and the supplier independently. That you will not see. But head office pays for it. So when the head office is paying, that is what you will consider. Returns from customer 3,000, goods sent to branch from head office 60,000, transfer 4,000, bad debt discount, remittances to head office not received by HO. So if not received, it will be a part of the closing balance. Branch expenses directly paid by HO 30,000, closing balance. Stock direct purchase 10,000, transfer from HO 15,000, debtors, how much is the amount? Impressed cash, how much is the amount? Petty cash expenses 4,000. So here these two numbers are not given. When these two numbers are not given, we need to derive. So how do we derive? As far as debtors are concerned, you will take opening balance, you will take the sales, you will take the bad debts, you will consider the discount, and then you will take the amount received, and finally it will be the closing balance. So debtors account we have to prepare, cash account we have to prepare, and they've said petty cash expenses is 4,000. Okay, so first let us target this debtors account. Why are we saying memorandum debtors account? Because this is a rough working. We are not actually preparing the debtors account. Okay. Now, sundry debtors opening balance 25,000. We will post it to the debtors account. Then credit sales 1,30,000 will come on the debit side of the debtors account. Return from customers 3,000, sales return credit side, that will come. Then bad debts 1,000, credit side. Discount to customer 2,000, credit side. Then they have not given us information of the collection from the customers, how much has been collected from the customers, that is not given. So let us plot the remaining values. Balance brought down 25,000, sales 1,30,000, sales return, bad debts, discount, and closing balance also we don't know, cash also we don't know. So if we don't know this cash, what should we do? We should look at the cash account, and there the balancing figure may be the amount collected from the customer. So what we will prepare? We will prepare one, the petty cash account, right? And then we will see how much amount can we assume that we have collected from the customers. Okay. Now in the petty cash account, impressed cash opening balance is 2,000. Then, and what they have also said is all the collections are transferred from the branch to head office. Whatever collections are happening that are transferred from branch to head office, and daily collections are transferred, means the collections are not stored. It will not impact my petty cash. Then what do? Then I will have to see how much collections I have sent. I have sent 1,65,000 to the head office. I have sent 1,65,000 to the head office. So that is one number. What we have that has been received by head office, and 5,000 we have sent, head office has not received. So 1,70,000 is sent by the branch to head office. This is from daily collection. Now, when I say this is from daily collection, that daily collection can be my cash sales, that daily collections can be my credit sales. Of course, my cash sales is here, 45,000. So out of this 1,70,000, 45,000 is my cash sale component, which means 170 minus 45, Can I say 1,25,000 is credit sales? So the first we thought we'll use the cash account to arrive at it, but cash account only has petty cash, and they have said all the daily collections are transferred to the head office. If all the collections are transferred, how much has been transferred? 165 plus 5, 170 has been transferred. Out of this 170, 45 is from cash account and balance 125 is from the customer. So in the customer side, we can say 1,25,000, and this is the balance carried down 24,000. This balance carried down 24,000 will come over here in terms of debtors. Okay, then. So we have taken care of the sundry debtors. Then stock transferred from HO, opening balance 24,000. Stock from direct purchases 16,000. Now some of you may say, sir, this stock of 16,000 is purchased by the branch. Why should we consider in the opening balance? Please understand, even if the branch has purchased that 16,000, who is making the payment? Head office is making the payment. So whatever is owned by the branch is ultimately owned by the head office. Head office will come and say, Mr. Branch, you have 2,000 of cash, that belongs to me. You have to receive 25,000 from the customer, that also belongs to me. You have 24,000 of my stock, 16,000 of direct purchases, that also belongs to me. So direct purchases, stock transfer, both of these are my opening stock. 40,000, debtors 25,000, cash 2,000. So we have considered 2,000, 25,000, this is done. Then credit sales. Will I record credit sales? I will not record here. Why? That is between the branch and the customer. So this credit sales will be recorded in the memorandum, customer's account or memorandum. Direct purchase is 45,000. Now this direct purchase is 45,000. The branch has done. The branch has done. But who pays for it? It is paid for by the head office. That is what the question says, right? Direct purchases are made by the branch for which payments are made at the head office. So that 45,000, this entry to creditors for direct purchases. So what are we doing? We are saying branch account to, you can say to bank also, if the company is immediately settled. If the company is immediately not settled, we will say branch account debit to creditors. What does this entry signify? This entry signifies that I have to recover 45,000 from the branch. So I have debited the branch account and I have to pay to the creditors. So I have credited the creditors account. Returns from customers will not come in the branch account. Goods sent to branch from head office 60,000 and transfer for petty cash expenses 4,000. So goods sent to branch 60,000, bank for petty cash expenses 4,000. Whatever money has been transferred, that will get recorded. Then bad debts will not record here. Discount from customer is between the branch and the customer, that will not record. Remittances to head office 1,65,000. So here you would say remittances received from the bank branch 45,000 and from debtors 1,20,000. Okay, that is 1,65,000. Now remittances not yet received by head office. What you can do is you can show it as cash in transit, or you can say closing branch assets. Here you can say cash in transit. Either you can include as a part of remittances received, or you can say it is still with the branch, it is cash in transit. Okay, so that will become 5,000, which is 1,70,000. Then branch expenses directly paid by head office 30,000. Bank 30,000. Closing balance. Stock direct purchase 10, transfer from head office 15. So 10 plus 15, 25,000. You will consider directly. Then debtors closing balance we have already calculated 24,000. Cash. How do we calculate the closing balance? Opening balance, amount received from head office, expenses incurred by the branch, closing balance 2,000. So this closing balance 2,000 will appear here. This difference is my P&L. Okay. Are we clear on how to handle different things when it is a debtors account? And most of the times you will not get a direct debtors account question where everything is at cost. Very rare in the examination. If you get, you are lucky. Any questions? Okay. So in data's method, branch is treated as my data. I will recover the money from my branch, my assets opening balance, my assets closing balance, and only the transaction between the head office and the branch will be considered, or any expenses made by the head office on behalf of the branch will be considered. All right. Then the second variation is stock and data's method. Now, the stock and data's method basically what it means is you will maintain, you want more details, of the expenses and all that has been done. So when it comes to stock and data's method, what you do is you will prepare a stock account. Whose stock account? Branch stock account. You'll maintain branch stock account. Then you'll maintain branch data's account. See, this branch data's account, if you ask me, this is not relevant for P&L purpose. Okay, this is relevant only for the purpose of calculation of what is the debtor's balance. As such, if you don't prepare that, you may lose marks because the question is on stock and debtor's method, but it will not be required to calculate the P. So you will maintain a stock account. You will maintain a branch expenses account separately. Means what is the expenses that has been incurred? What is the expenses that has been incurred? Okay. Then you have this goods sent to branch account. This is used to identify how much amount you should reduce from purchases. So for example, if I have 10,000 of purchases, I send 4,000 to the branch. So my net purchases for my P&L purpose, for head office P&L purpose, should only be 6,000. So that is the purpose of this account. Then you will maintain branch cash account to know the closing balance of cash. Branch fixed asset account, if at all the branch owns fixed asset. Sir, what if in the debtors method we have fixed asset? Then you will consider that as a part of your opening balance only. Okay, so if fixed assets are there in the branch, okay, and you want to, have a control that, okay, branches purchase some fixed asset that also we own or it is with the branch, that you will show it in the balance. So what happens is opening balance, fixed asset, let us say 10,000. Closing balance, fixed asset 9,500. The 500 of depreciation automatically gets captured. Okay. Then we have branch P&L account. In this branch P&L account, we'll take from the stock account and from the expenses account and we'll transfer the amount to the thing. So here, generally in the examination, you'll be required stock account, debtors account, expenses account. This may be asked, may not be asked, and the branch P&L account. If cash is missing or fixed asset account is required, you need to prepare that as well. Okay. So let's look at this question. The Bombay traders, and see, so far we are dealing with cost basis only on the basis of cost. The Bombay traders invoiced goods to its Delhi branch at cost. Bombay traders, Delhi branch. Head office paid all the branch expenses from its bank account, except petty cash expenses which were made by the branch. All the cash collected by the branch was banked on the same day to the credit of head office. So you collect the amount from the customer, you immediately deposit in the bank. The following is the summary of transaction entered into at the branch during the year 31st December of year 1. So you have opening balances, stock, debtors, cash, goods sent from head office, goods returned to head office, cash sales, credit sales, allowance to customers. So this is like a bad debt, discount to customers, bad debt 600. So there are this maybe something free that has been given, but when you say allowances, or it could be some kind of refreshments or something like that. Goods returned by customer 500. Now please understand, if goods are returned by customer in the debtors method, we are not bothered. Only in the stock and debtors method we are bothered. Salary and wages 6,200, rent and rates 1,200, sundry expenses 800, cash received from customers 28,500, balances 65,98,100. Now these expenses, except petty cash expenses, are made by the petty cash expenses were made by the branch, other are made by the head office. So rent rates, sundry expenses, cash received from salary and wages, these expenses are incurred or these expenses are incurred by the branch, but met by the head office. Prepare branch account debtors method, then second method and third method. So when it comes to branch account or the debtors method, what do? We'll take opening balances, stock, debtors, petty cash. Stock, debtors, petty cash, opening balance. Then goods sent from head office 26,000, debit branch 26,000. Goods returned to head office 1,000. Head office has received back, so you will credit the branch. It is like I sell to the customer, I debit the customer, I return it back, I will credit the customer. Then cash sales, credit sales 17,500, 28,400. Every collection is banked immediately. So this entire amount is credited here. Means branch has given the amount to the head office. Head office says I have received in the bank 17,500 and 25. Okay. Then allowance to customer, discount to customer, bad debts and goods returned by customers is between the branch and the customer. In the debtors method, this will not come. Okay. Then salary and wages, rent, rates, sundry expenses. This has been paid by head office on behalf of the branch. So what do? We'll debit the branch, we'll credit. We'll debit branch, we'll credit bank. Sorry. We will debit branch, credit bank. 6,200, 1,200. Then cash receipt from sundry debtors 28,500. Oh, so I think I told 28,400. It is 28,500. Okay. Whatever cash has been collected, not the total credit sales. 17,500 cash sales and amount collected from the customers 28,500. Okay, 46,000 that is how it is divided. Then closing balance is 6,500, 9,800, 100. 6,500, 9,800, 100. This is the closing balance. And if you do the total, the difference becomes 9,400, which is your P. Okay. Now, petty cash opening 200, closing 100. There are no information of petty cash movement. So you can assume that 100 is the petty cash expense. Right? This is the debtors method. Second method is stock and debtors method, where you need to prepare the stock account. Then debtors account is prepared, but that will not impact your P&L. Then you'll prepare the branch expenses account, goods sent to branch account, and the okay. Now in the stock and data method, when you say branch stock account, basically what it means is head office has sent goods to the branch, and branch has sold the goods to the customers. Head office has sent the goods to the branch, and branch has sold the goods to the customer. It is like my trading account, which will capture inflow of stock, outflow of stock, inflow of stock, outflow of stock. Okay. Now, how do we do this? First, what do we capture in trading account? Opening balance of stock. What is the opening balance of stock? Opening balance of stock is 7,000. So, like we say in the trading account, 2 opening stock. Here also we'll have 2 opening stock, 7,000. All right. Opening balance of stock 7,000. Then this is done. Debtors will prepare separately. So debtors, in the debtors account, you can write 12,600 opening balance. 12,600 opening balance. Okay. Then goods sent from head office 26,000. Now goods has been sent from head office. Where did we send it to? We sent it to the branch. So this will increase the stock at branch. So in the stock branch stock account, you will say 2 goods sent from head office. That is 2 goods sent to branch 26,000, and the goods return will come on the credit side 1,000, or you can reduce from goods sent from head office account also. So 26,000 and 1,000. Goods sent to branch 26,000, goods return 1,000. So whatever is sent, you will debit branch, credit goods sent to branch account. Whatever has been returned, you will credit. Okay. Then we have sales 17,500 and 28,400. Now in trading account, what do we do with the sales? We credit the sales to the trading account. Here, we are crediting the sales to the stock account. Here we are crediting the sales to the stock account. 17,500, 28,400, and goods returned by the customers 500. See, bad debt, allowances, discount, these are not my trading account items. These are my P&L items. So I will not touch them. What is the sales that I have made? 17,500 plus 28,400. I will credit that to the branch stock account, and whatever has been returned by the customer, I will reduce that. So 17,500, 28,400 sales minus sales return 45,400. So this is like my sales, and closing stock 6,500. This number. All right. After I do all of that, I will transfer this amount to the branch P&L account. Which account? To branch P&L account. Okay, 19,900. Treat this as your trading account or trading P&L. All right. Then, when you prepare the debtors account, this will capture transaction between branch and customer. Branch and customer. So, opening balance, sales, credit sales, cash collected, sales return, allowances, discounts, bad debt. All of this has been given. And closing balance of 9,800. This is a normal thing. This will, as I again told you, this will not impact your P&L. Okay. So in the exam, what you can do is you can prepare this towards the end also. Then branch expenses account. Trading account or the branch stock account is your trading account. This is kind of your branch expenses account. That is the P&L part. Okay. Now, what do we capture here? All the expenses. What do we capture here? All the expenses. So what are the expenses? It is done. Allowances to customer, 200, this is an expense. Discount to customer is an expense. Bad debt is an expense. Salary and wages, rent and rates, sundry expenses, all of these expenses. And petty cash opening balance is 200. 100 is the closing balance. This 100 is also the expense. So, Delhi branch expense account. So we can say to bank and note this down, or you can write it this way also. Not a problem. Okay. 6,200 salary and wages, rent, sundry expenses, petty cash expense. This be careful in the examination. Allowance, discount, bad debts. All are the total expense will be transferred to the branch. What is the P&L account capture? Gross profit from the stock account, branch expenses from the expenses account, and the net amount is 9,400, which is your 9,400, which is your P&L. Is it the same number? It is the same. Okay. So this is the easiest. This is the second one. Where you have to remember what are the accounts? Stock account, debtor account, expenses account, P&L. Okay. Now, so do we need to prepare goods sent to branch account? If asked in the question, you can prepare. Otherwise, if it's a very lengthy question, you can ignore also. Okay, that can be done. Then the third method is trading and P&L account, like we normally prepare trading and P&L account. So how to prepare this? This trading and P&L account basically is a combination of branch stock account plus branch expenses account. Means if you have done the stock and debtors account properly, this account you can do it directly. You can do it directly. How? Opening stock 7,000. Same number. Then goods sent to branch 26,000. That is kind of your purchases. Minus goods return 1,000. 25,000. You can put it on the other side also. 26,000 minus 1,000. 25,000. Same way sales. Cash sales, credit sales, returns, total sales 45,400, which matches with the sales number here. Then closing stock and gross profit. Same gross profit we calculated in the branch stock account as well. Then all the expenses, salaries, rent, sundry expenses, petty cash expenses, allowances, discount, bad debt, all these expenses will plot here, and the net profit is 1,000. Okay, so this is how you can understand the three methods. That is the stock method, sorry, the debtors method, the stock and debtors method, and P&L method on cost basis. Okay, now we will stop here. What I want you to do is, after the class gets over, go back and try to do all of these questions, because The subsequent thing, tomorrow when we start, when goods are invoiced at selling price, this understanding is important. So you should know in which method, how did we do the accounting form. Any questions or is it all clear? All clear? Great. Okay. So we'll to continue tomorrow the branches accounting and we'll try to finish it up tomorrow. Sure. Thank you. Now, yesterday we saw cases where goods are sent at cost. Now we are looking at cases where goods are invoiced at selling price. Now, selling price basically, why do they do that is typically, if you understand the scenario, head office is sending goods to branch. Okay. Head office, let us say cost is 100 to branch also if they're selling at 100 and branch sells it further at let us say 120. We say 20 is the profit earned by the branch. But if this branch had to buy that product from outside, they would not have got it at 100. Maybe they would have got it at 115 or 110. So actual profit, if you see, because of the branch is only 10. Or the other way to look at it is, if the head office was selling this to other customers, other wholesalers, they would be able to sell it anyways at 110 and 115. So to measure the efficacy of the branch, what they do is, they say, okay, our cost is 100. For the company, the cost is 100. But when we transfer to the branch, we will have a different price, maybe 20, 120, 125. And based on that, we will evaluate how much profit has the branch made. Okay. So that is when we say it is invoiced at selling price. Selling price means selling price of head office. So whatever the head office sells to other persons or other customers at the same price, they would sell it to your branch as well. Okay. Now, there are two ways in which the questions can be asked. One is they would say cost plus percent, or they would say some percent of selling price. So they can say 20% on cost. This is added and it is sold, or they may say 20% of selling price. Now, the way to do this in the examination without getting confused is that whatever is this percentage on, so here it is 20% on cost, take cost is equal to 100, profit will be 20, selling price will be 120. And if they give you, let us say, selling price, you can find out the profit by doing a simple cross multiplication. Same way, if they say selling price, 20% of selling price, take selling price as 100, profit will be 20, and cost will be 80. Okay, that is one thing. Now, when goods are sent at selling price, when goods are invoiced at selling price, at what value do we record and how do we prepare the accounts? So typically, if you follow, one is your stock and debtors method, and the other one is the debtors method. A P&L method is of course much simpler. So when you follow the stock and debtors method, you will prepare the stock account. You will prepare the stock account. You will prepare the adjustment account. And when you're preparing the stock account, you can record at the selling price. And whatever is the profit or loss on goods sent, that can be transferred to the adjustment account. Now, whatever I'm explaining, it can be better understood if you look at an example. Okay, so let us have a look at this question. Harrison of Chennai has a branch at New Delhi to which goods are sent at 20% above cost. The branch makes both costs, cash and credit sales. Branch expenses are met partly from head office and partly by the branch. Statement of expenses incurred by the branch is sent to the head office for recording. Volume is low. Now, here what has happened? The company has a branch at New Delhi. Goods are sent at 20% above cost. And the details are given. Cost of goods sent to the branch at cost. 2 lakhs. Means how much is the profit? 20% of 2 lakhs is the profit. Goods received by branch at invoice price. So, this is sent at cost. This is at invoice price. Now, invoice price means what? Cost plus profit is equal to invoice price. Now, if cost is 100, profit is 20, invoice price is 120. So, against 120, if you see they have received 2,20,000. Okay. So, what is the profit? What is the profit element in this? You can do a simple cross multiplication, that is 2,20,000 into 20 divided by 120, that is 220 into 20 divided by 120. 220 into 2. 220 into 20 divided by 120. It is 36,000 is the profit element. Now, other thing that you have to understand here is they have sent 2 lakhs plus 20,000 at 2,40,000, which means 20,000 at invoice price is still in transit. 20,000 at invoice price is still in transit. Credit sales for the year at invoice price 165. Cash sales for the year at invoice price 59,000. Cash remitted to head office 2,22,500. Expenses paid by head office 12,000. Bad debts written of 750. Balances stock at cost 25. Invoice price 28,000. Debtors and cash in hand. Show the necessary ledger accounts in the books of head office and determine the profit or loss for the branch for the year ended 31st March. Now, in examination, they will not give you a question like this. They will actually tell you prepare as per the stock and debtors method and prepare the necessary ledgers. All right. Now, when we follow the stock and debtors method, what do? We prepare something called as the branch stock account. Now, in this branch stock account, how will we record the amounts? If it is at cost, no problem. Directly you can take cost and you can record it. If it is at invoice price, then what is to be done? Then you will record these at invoice prices. So the stock account will be maintained at invoice prices. The stock account will be maintained at invoice prices. Now, opening balance of stock is given at 25,000 cost. How much is the profit? Into 20%. So 5,000 is the profit. So opening stock will be valued at 25,000 plus 5,000, 30,000. Okay. Then goods sent to branch 2,40,000. Now, what is this 2,40,000? 2,40,000 is the goods which has been sent at cost is 2 lakhs plus 20% is 40,000. So 2,40,000 is invoice price. We will consider invoice prices only. All right. Then sales. Now, why are we saying buy branch debtors by sales here? Basically, the stock is going out. The stock is going out here, right? Now, when the stock is going out, if you see the sales at invoice price 1,65,000 means the branch has issued or branch has dispatched goods worth 1,65,000. So that is what you will credit here. Same way, cash sales at invoice price 59,000. So what you have to understand here is everything is recorded at invoice prices only. Everything is recorded at invoice prices only. So 1,65,000 and 59,000 basically goods which has been sold by the branch. Goods which has been sold by the branch. This is basically stock out or stock going out. Okay. Then, sir, what if they sell at a higher value? Then you will record at the higher value itself, higher value, or you can record it at cost and you will arrive at the closing stock. Then cash remitted to head office, that will not come in the stock account. Expenses paid by head office will not come in stock account. Bad debts written off will also not come in stock account. This will go to the debtors account. This will go to the debtors account. Then balances, closing balance of stock at invoice price is 28,000. So 28,000 is the closing stock. Then here we had calculated 2,40,000 is goods sent, 2,20,000 is goods received. Means 20,000 is not yet received. 20,000 is not yet received. Where are those goods? Those goods are in transit. Those goods are in transit. Basically, those are in inventory but in transit. So that also we need to record as goods in transit. So this becomes my closing stock, opening stock, goods sent, and the sales made. If there is any balancing figure in this account, now you may say, sir, if everything is recorded at invoice price, how can there be a balancing figure? There could be some, maybe gain. Sometimes what happens is, typically if you are working in the retail sector, you have to sell, let us say, per kg basis you sell. Instead of dispatching full kg, it may be sometimes you may be dispatching only 990 grams and the customer may not figure out. So like that, there could be some gains. Okay. Or they might have, sold something at a higher value and realized a higher value. That can be multiple scenarios. But here what you have to understand is any balancing figure here will be transferred to the branch adjustment account. This is like where you will capture or compute the gross profit after adjustment of reserves. Okay, so this is transferred. This part is done as far as stock account is concerned. Now, because we are following stock and debtors method, we also need to do the debtors accounting. Now, debtors accounting, balance brought down 32,750 as given. Then bad debts written off given in the question. 1,65,000 sales. Closing balance 26,000 given in the question. So this becomes our balancing figure, basically cash collected. Okay, so this is the next account. Now, cash account will come to it subsequently. Next important account is branch adjustment account. Now, what do we capture in this branch adjustment account? Stock reserves. Your stock reserves, whatever are there, that is captured in the branch adjustment account. Now, where will we get the reserves? You will get the reserves in opening stock. Here, whatever is there you have kept here in opening stock, the profit element of opening stock will be posted to the credit side of branch adjustment account. So 30,000 and we have seen 5,000 is the reserve, 5,000 is posted here. Goods sent to branch, we had sent goods of 2 lakhs, 20% of that is 40,000, that is posted here. Then on closing stock, how much is the reserve? How to calculate? 20,000 plus 28,000. 48,000 is invoice price. This represents 120. How much is the profit? If you have to calculate 20, how much is the profit? So you will do 48,000 cross multiplication into 20 divided by 120. So 20 into 6, 6 into 8,000. So the closing stock reserve. Okay. Then in the branch adjustment account, we had a profit of 2,000 that branch stock account that we transferred here. The balancing figure of this represents the gross profit. So in the branch adjustment account, after posting all the reserves, we'll calculate this gross profit. Sir, what if goods are returned back? So if there are goods returned, that the profit element will also be adjusted in the branch adjustment account, right? Then this profit is transferred to branch P&L and where we will record the remaining expenses. What are the remaining expenses? You have expenses paid by head office, 12,000. Then, we need to also prepare the cash account. We have not prepared the cash account. So first we will prepare of the cash account. Now, when it comes to cash account, we have opening cash in hand, 5,000, closing 2,500. There have been some collections from the customers. There have been cashes and there has been invoice amounts which has been dispatched to the or sent to the head office. So opening balance 5,000. Then sales, cash sales. You collected 59,000. Then branch debtors 1,71,000 what you have collected from this particular balance. By remittance to head office 2,22,500 as given in the question. And the balancing figure represents the cash expenses. So that cash expenses you will record in the branch P&L. So instead of doing this separately, what you can do, branch expenses 12,000 and the head office and branch cash. So basically expenses paid by head office 12,000 and expenses paid by branch 10,000. So 12,000 plus 10,000, 22,000 is your branch expenses. Bad debt written off 750 and the balancing amount will be the net profit. Okay. This is again, we can prepare this goods sent to branch account by branch stock account. Then this 40,000 is your branch adjustment profit to be reduced and the balance amount will be reduced from the purchases. This, if not asked in the question, you can exclude also. But more importantly, when they ask you the stock and debtors method, stock is important, debtors is important, cash account, if at all there are missing figures to determine that, branch adjustment account and branch P&L account. This expenses account can be recorded directly in the branch P&L account. Okay. Are we clear with the step? Any doubt in this particular question? Let's look at this question. 10 marks. Jolly Industries is a trader in spices. It has branch at Jalandhar to which head office invoices goods at 20% on sales. So here sales is 100, profit is 20, cost is 80. The Jalandhar branch sells spices both on cash and credit. Branch remits all cash received to head office. Thus, all expenses of branch are also paid from the head office. From the following information, prepare branch accounts in the head office using stock and debtors account. So where are we preparing? We are preparing in the head office books. Branch is not maintaining anything. We are preparing in the head office books. Branch does not maintain any books but sends fortnightly returns. Stock at Jalandhar branch as on 1st of April, cost price 1 lakh. That is 80. Sundry debtors at Jalandhar as on 1st of April, 1,10,000. Cash received from debtors 345. Bad debts. This will be our expense. Discount allowed also expense. Goods received from head office at invoice price 6 lakh. So this represents 100. This represents 80. Returns to head office at invoice price. Okay. So be careful. Sometimes in the examination, they will say goods received at invoice price, returns at cost. Okay. Normal loss of goods during transport, out of goods sent by head office to the branch, 12,000. So that is a part of our normal loss. Sales return at Jalandhar branch. Now this is for useful for debtors account preparation and also the stock account. Salaries and staff welfares at the branch 54,000, rent and taxes 9,000, other office expenses 2,500, sundry debtors closing balance 155, stock at Jalandhar cost price 120. Here also cost, here also cost. Credit sales are 4 times the cash sales at the branch. So they have not told us how much is the sales. We have to compute the sales by using this credit sales at branch are 4 times of cash sales. So whatever are the cash sales, if cash sales is X, credit sales will be 4X. Okay. Now, first, we have to prepare when we say stock and debtors, we have to prepare the stock account and debtors account. In the stock account, opening stock 1 lakh. Now, this 1 lakh represents 80. So, what do we do? If 1 lakh represents 80, 1 lakh divided by 80 multiplied by 100. If I do 1 lakh divided by 80 multiplied by 100, we get 1,25,000. Okay. Then they have not given sales account. So to prepare the sales account, we need to the debtors account. We need to prepare the debtors account. Did we miss the information? Just a second. Opening stock is there. Opening debtors is there. Cash receipt from debtors is there. So by using the debtors, cash receipt from debtors, bad debts, discount allowed, and closing balance of sundry debtors, by using all of this information, the balancing figure we can say is our sales. And also here you have goods return also, sales return also. So what you will do in the customer account or the sundry debtors account, balance brought down 1,10,000 opening balance. 3,45,000 cash paid. Cash received from debtors 3,45,000. Discount given 5,500, bad debts in the question 9,500, sales return 11,000. So just see this. The sales are credited to branch stock account. The sales return are debited to branch stock account. Balance carried down is given. So this 4,16,000 is the balancing figure which represents sale. Balancing figure which represents sale. So what did we do? We took the information of opening stock, of opening balance of debtors, amount received from the debtors, sales return by the debtors, discount, bad debts, closing balance, and the balancing figure 4,16,000 is our credit sales. So cash sales will be 4,16,000 divided by 4. 416 divided by 4, it is 1,04,000. Are we clear on this part? Gross sales, no, this is total sales. This is the sales return. So net sales will be 416 minus 11,000. Now come to the branch. So first thing is that missing information we calculated using the debtors account. So cash sales 1,04,000, credit sale 4,16,000. You will post it as it is. All right. Then sales return you will post on the debit side because you have received back the stock. Then goods received from head office at invoice price 6 lakhs and normal loss during transport 12,000. Means what? We received, see, they received 6 lakhs. But from my side, I had sent 6,12,000. And this 12,000 is normal loss. So whatever is the normal loss is our part of our trading expenses only. So that also should be considered. So total send 6 lakhs plus 12,000, 6 lakhs 12,000. And the 12,000 is the normal loss which has been incurred. Then we have returns to head office 60,000. out of this 6,12,000, there is a normal loss of how much? 12,000. So think of it this way. I have debited the stock account by 6,12,000, saying that I have sent goods worth 6,12,000, but the other party received only 12,000. So what will I do? I will take this as a loss and transfer it to the branch stock adjustment account, or I can, because it's a normal loss, I'll transfer it to the branch stock adjustment account. Okay. Then closing stock balance is 1,50,000, which is 1,20,000. 1,20,000 divided by 80 multiplied by 100. So 120 divided by 80 multiplied by 100, if I do, I get 1,50,000. Right. Now 12,000 is the normal loss, and the balancing figure here is the abnormal loss, or you can just say loss. In the example that we saw in the study material, there was a gain. Here there is a loss. Now out of 6,12,000, 12,000 is the normal loss and 6,000 is the abnormal loss. So could we have done that? We would have recorded 6,000 here and not record these two. Your numbers will not differ. The final number will be the same. But what will happen is, in the goods sent to branch account, you will record only 6 lakh, which is not right. Goods sent to branch account is 6,12,000. So you have to record the full value and record the normal loss and abnormal loss separately. Okay. So that is one peculiar adjustment in this particular question. Then coming to branch stock adjustment account, which is the next important account that we need to prepare. On opening stock, 1,25,000. You have 25,000 of stock reserve. Then on goods sent to branch account, that is returned. Okay, or first we'll do the goods sent to branch account directly. 6,12,000. So 6,12,000 divided by 5. Why? Because this is at invoice price and it is 20% on sales price. So I have sent 6,12,000. Here I'll have 6,12,000 into 20%. I get 1,22,400. That is the profit element on the goods transfer. Now, out of this profit element on goods transferred, they have received only 6 lakhs. So basically, when you do that adjustment of normal loss, this 1,200 will be reduced from the stock value. Okay. Why? Because here we have taken 6,12,000 full value, whereas the branch has not received the full value. Oh, sorry, this is the abnormal loss portion. I got branch has not received the full value, so entire normal loss is written off. Okay, I was thinking this at 12,000. Now this 12,000 entirely is lost, and in the abnormal loss, this 6,000 includes the profit element. See, we are crediting something here. This 6,000 includes the profit element. So that abnormal loss part is adjusted by eliminating the profit element. Okay. Even if you don't do that, okay, even if you don't do that, your final number will finally match. Okay. Then closing balance 1,50,000, 30,000 is the stock element or the portion of profit in the closing stock, right? Then this is on the sales return. Return to head office. Return to head office 12,000. So whatever amount has been returned back to the head office, the profit element on that is 12,000, which is adjusted here. So once you do that, the P&L number is 92,200. Okay. Any questions here? So here, I think what they have missed out is they have only taken the loss portion here 1,200, whereas we should have taken entire 6,000. This is only the profit element. Cross element also should be debited to this account. Accordingly, this number will change. Okay, please keep that in a note. If you are taking 1,200 as loss, this 4,800 of loss also should be taken, or this 4,800 directly you can debit to the P&L account here. Okay, so that is how it is balanced. So basically what we are saying is, this is our total loss of 6,000. Out of this total loss of 6,000, 1,200 is the profit element which is recorded in the branch stock adjustment account, and the balance 4,800 is recorded in the P&L. Okay, so that is one thing which you need to keep in mind, right? Then goods sent to branch account, whatever goods you have sent, then the stock adjustment account, again 12,000 of stock adjustment account from those respective part, 60,000 of goods return, profit element on that, this will be reduced from the purchase account. Then in the branch expenses account, rent and taxes 9,000, other office expenses 2,500, salaries and staff welfare 54,000. So you will record 54,000, 9,000 and office expenses 2,500. 2,500. Okay. This branch expenses account, what you have recorded, that is transferred to branch P&L account. And in the branch P&L, from stock adjustment 90 to 200, this number. Then branch expenses 6,500, 5,500 and 9,500. These are your discount and bad debts. And abnormal loss 4,800, the cost which is transferred to P&L. Net profit is finally 6,900. Now in this question, the two specific things that we have to keep in mind is, one, there was a abnormal loss. Out of this abnormal loss, the treatment that was given is 6,000, 4,800 cost will be taken to P&L, and the profit element of this will be removed from the adjustment. Sir, can we not remove entire 6,000 from the P&L? Then what will happen is, in your branch adjustment account, you will be charging extra losses, because 6,000 is the total loss, that includes 1,200 of profit. So 1,200 of profit element we have removed from the stock account or the adjustment account, and 4,800 has been removed from the cost account. Now, generally when you get this kind of adjustment, and if you're seeing it for the first time, what could happen is, you might have taken entirely 6,000 in the adjustment account. Then in that case, what should we do? Your final number will not be different. Okay, you may lose 1 or 2 marks here and there, but final number ultimately will be the same. So things to be taken care when you have a question like this. Prepare the stock account properly at invoice price. Then prepare the debtors account to identify if there is any balancing figure, loss or something like that. In the adjustment account, capture all the profit element. In the expenses account, capture all the expenses. Sir, can we combine these expenses and P&L? You can. Instead of preparing a separate branch expenses account, if you want to capture everything in the branch P&L account, that is also possible. Okay. So this was asked for 10 marks, and see, it's a lengthy question, but 6 to 8 marks we should be able to score. 6 to 8 marks we should be able to score. All right. Yes. Now here, if you see, IAL Limited invoices goods to its branch at cost plus 33.3%, 1/3%. Prepare branch stock adjustment, and branch profit and loss account as they would appear in the books of head office. So stock at invoice price is given, stock at close branch invoice price, this is given, goods sent to branch during the year, including goods invoiced but not received by the branch. So total goods sent is this. On the closing stock side, you would say branch closing stock is 288 plus 48 is in transit. Return of goods head office invoice price, credit sales at branch 120, invoice value of goods pilfered means loss 24,000, normal loss due to deterioration 36,000, cash sales at branch 2160. Okay, so now here, see, opening balance 360, closing balance 288, opening balance 360, closing balance 288, and in transit 48,000. Okay, then goods sent to branch 24,000, cash sales 2160, credit sales 120, goods return 120. Okay, then they have said pilferage 24,000. Now, what is the meaning of this pilferage? Pilferage basically means that there is a loss. Somebody has stolen your stock. Somebody has stolen your stock. Right? Now, pilferage is not normal. Pilferage is not a normal loss. Whatever pilferage you see here, it is theft. Theft is not normal loss. So, what will you do? This 24,000 you will credit to the stock account. 24,000 you will credit to the stock account. Now, two things. Out of this abnormal loss, as we did in the previous question, you can directly do 24,000 here and then split that between branch adjustment account and branch P&L account, or here itself, like in this question, branch adjustment, that is the profit element, you record here, and branch P&L, you take the cost. So if you have to deal it in this way, all the abnormal loss that you get, split that between the cost element and profit element. Profit element, adjustment account, cost element, P&L. Okay, then this is done. Then normal loss. Here they have said normal loss. Entire normal loss is credited to the branch stock account because there we will assume that everything has been lost. Okay. Then by balance carried down, in hand and in transit. So whatever the balance is left over 36,000, this is the surplus. Surplus means profit kind of a thing. Okay. Now this surplus could have arisen because of multiple different factors, selling at a higher price and all of that. That we don't need to worry about. We just need to worry about how to properly post these accounts. Right now, this 36,000 of surplus will be transferred to your branch adjustment account. Now, in branch adjustment account, what do we have? Opening stock reserve, closing stock reserve, 336, 360. Okay, then so how to calculate that? They have said 33 cost plus 33. So if cost is equal to 100, profit is equal to 33.3, selling price is equal to 133.33. So profit, if you have to calculate, 33.33 divided by 133.33, that is 33.33 divided by 133.33, that gives you 25%. Okay, so you can calculate the stock reserve. Then normal loss. On abnormal loss, whatever is the profit element has been recorded here. The balance 24,000 will be recorded in the P&L. Coming to P&L account, from branch adjustment account, abnormal loss, net profit transfer to the general P&L. Now you see, this also was for 10 marks. And the previous question was also for 10 marks. The previous question was much lengthier. Previous question was much lengthier. So what you have to do is see the marks allocated and only pick up this question, because sometimes it can be a lengthy question where you will be ending wasting unnecessary time. Is it clear? This you can practice a 10-mark question for getting more comfort in this type of questions. So typically, you are expected to prepare the branch stock account, and they'll clearly say stock and debtors method, and you will get adjustment related questions only. That is, goods sold at here 20% above cost. Only these type of questions you will get. If you get only goods being sent at cost questions, then you are actually very okay. So these two you can for this you can practice. Now coming back, if you follow the debtors method, you will only be most important account is your branch account. And how do you prepare the branch account? In the branch account, you will have opening balances of all the items, closing balances of all the items. Okay, then this opening stock, the reserve for that will be credited there only, meaning to say whatever is your opening stock 30,000, the stock reserve on that will be put on the credit side in the same account. Same way, goods sent to branch account 2 lakhs plus 20%, 2,40,000. The 40,000 of profit is credited to the branch account itself. If expenses are paid by head office, 12,000. If expenses are incurred by the branch, no need to record when you are following the debtors method, because I am concerned only with my transactions with the branch. I am not concerned with the transaction that the branch is carrying out with the outsiders. So expenses which are paid by head office will record here. Expenses which are paid by the branch will not record. Then amount sent back 225. Balance carried down, debtors 26,000, stock 48,000, cash 48,000 stock reserve, you will record here, and the balance is the net profit. Debtors method is more simple. They may ask if they ask for 5 marks, but largely we have seen stock and debtors method being tested. Okay, trading and P&L method, just an extension. Okay, now when you're preparing trading and P&L method, what you have to do is whatever is the cost, you'll record at the cost in the P&L, or you can record at the invoice price and adjust for the reserves. Okay, now here in this particular question, this is basically it is more like a wholesale branch. Okay, it is not a direct P&L. Goods are invoiced to the branch at cost plus 20%. Sale price is cost plus 50%. So if it is 100 of cost, you will invoice it at 120, and selling price is 150. Okay, that is the scenario. So this acts as your wholesale price. Stock at invoice price 2,20,000. This number. Goods sent 11 lakhs, sales 12 lakhs, expenses 45,000. Prepare, calculate the profit earned by the branch during the year. So this is basically here you can follow directly the P&L method. Now, sir, can we use stock and debtors method here? We cannot because we don't have further information of debtors and all. Okay, we don't have further information of other aspects of expenses. Can we follow the debtors method? Not possible because we don't again have the information of the debtors. So in this case, you can directly prepare the P&L. Now, while preparing the P&L, opening stock 2,20,000. We are maintaining at the invoice price. Then goods not received by the head office, goods sent by the head office 11 lakhs, recorded it at 11 lakhs, expenses 45,000, net profit. Sales is done at 12 lakhs, closing stock is 3,60,000. Now, how do we get to the closing stock? Basically, opening stock is 2,20,000, goods sent is 11 lakhs. How much has been sold? 12 lakhs has been sold. But this 12 lakhs is at 150. So 12 lakhs is sold. The valuation is at 150. We need what is the cost of sold? What is the invoice price of goods sold? So 120. How much is 120? So 1200 divided by 150 multiplied by 120. If we do, we get 960. I am repeating once again. The sales during the year is at selling price, which is cost plus 50%. We need the invoice price, cost plus 20%. So 12 lakhs divided by 150 multiplied by 150, which gives us 9,60,000. So opening stock 220 plus 1100 sent minus 960 goods sold. Closing stock at invoice price is 3,60,000. So closing stock is 3,60,000. Profit earned by the branch is 195. Now here we didn't do any adjustment for reserve because it is more about earned by the branch. That is the assumption. Alternatively, you can say we also need to arrive at the head office profit, means from the point of view of head office, then accordingly stock reserves may also be adjusted. Okay, but because we are recording sales at sale value, that in essence captures, what we can instead do is for these items 220, this 11 lakhs transferred and the closing stock, we can capture the reserves also, so that we get to know the true profit. Okay. Then the previous example that we saw, it was more like a goods invoice at wholesale price to the retail branches. Meaning to say, my cost is 100, my wholesale selling price is 120, my retail selling price is 150. So I will dispatch or I will transfer the goods at 120 to the branch to evaluate how much profit is the branch making. Now, when we do the wholesale pricing, accounting is done at wholesale prices only. Okay, that is why in the previous question also we saw the same thing. Mr. Rahul operates a number of retail outlets to which goods are invoiced at wholesale price, which is cost plus 25%. They sell the goods at retail price, which is wholesale price plus 20%. Now, sir, how do we identify whether to follow wholesale method or the stock and debtors method? Here you can see, two types of profit elements are given. So, for as far as the accounting part is concerned, for the branch, this is what is relevant, and this is the final selling price. Okay. Stock at the outlet at 1421 or 14 year one is 30,000. Now this 30,000 is at what? Is it at 100? Is it at 125? Or is it? So if cost is 100, wholesale price is 125, retail selling price is 125 into 1.2. That is 125 into 1.2, we get 150. Now this 30,000 is the stock at outlet at which value? At the wholesale price of 125. Goods invoiced to the outlet during the year 324. Gross profit made by the outlet 60,000. Goods lost. Oh, there is a goods lost by fire missing. Expenses 20,000. Stock at the outlet 36,000. Now this is the closing balance. So how do we calculate how much of amount has been lost due to fire or how much of stock has been lost due to fire? So for that, we will prepare the stock account. Opening balance 30,000, wholesale price. Closing balance 36,000, also at wholesale price. Goods sent to outlet 324, again at wholesale price. Then they have said gross profit made by the outlet 60,000. Gross profit made by the outlet 60,000. Now, how much is the sales and how much is the goods lost by fire? If goods lost, if the gross profit is 60,000, so basically, what is the profit at branch? Profit is equal to, for the branch, retail selling price minus wholesale selling price. That is 150 minus 25. That is 25. So, if gross profit is 25, your retail selling price is 150. So, if gross profit is 60, how much is the retail selling price? You can do a cross multiplication. 150 into 60 divided by 25. 150 into 60. 150 into 60 divided by 20. 150 into 60 divided by 25. We get 360,000. So, this is the sales number. And the balancing figure is goods lost by 5. Okay, so that's the first thing. Then profit and loss account. In the profit and loss account, you have gross profit coming from this 60,000. Then the loss due to fire is debited here, expense is debited here. This is the profit for the branch. Okay, now as far as the head office is concerned, they will make a higher profit because on these, all of these also, there is a stock reserve element because we are selling it at a higher price. Now here they have said stock reserve account. In the stock reserve account, what you will do, this is on opening stock. That is 6,000. Then this is on closing stock, 7,200. That is the stock reserve. Opening stock, transfer to P&L, and closing also transfer to P&L, or you can just transfer the net amount to P&L. Both of that is acceptable. Okay, so that is the stock reserve account. Now, whenever they say stock reserve account, it is only on the opening stock and closing stock. So why not on this? See, for this goods sent to outlet account, that you will separately adjust by passing a contra entry when the goods are sent. Stock reserve basically represents only the opening stock and closing stock as far as the books are concerned. Opening stock and closing stock. Any questions? Clear? Okay. So my pencil also needs recharge. So we will take it's 10:55. So we'll assemble back at 11 by the time the pencil also will get recharged. And then we'll go on for accounting for independent branches, which is again a very important topic as far as the examination is concerned. All right. So now we'll move to the independent branches. Before that, a quick recap. We did debtors method, stock and debtors method, and P&L method. Most likely you'll get stock and debtors method in the exam. And for stock and debtors method, you'll prepare the stock account, debtors account, branch adjustment account, branch expenses account, P&L account, cash account if required. So many accounts to prepare. And if you get a 10-mark question, you may consider time factor before answering. Okay. Now, in stock account, you will record everything as the invoice price. Okay. Then in the branch adjustment account, you will have the recordings or the items related to the stock reserves, profit on the stock, goods and goods received. Okay, then goods and goods both are same. Goods returned, right? Opening stock, closing stock. If there is any normal loss, full amount is written off from the stock account. And if it is abnormal loss, full amount is written off from the stock account. Profit element is written off from the branch adjustment account, and the cost element is written off from the branch P&L account. In the expenses account, you will capture all the expenses. Debtors account may be needed to prepare or to identify what is the, if at all there are any, bad dates, or if at all there are any, if they have to determine sales. So be careful of the balancing figures, right? That is about dependent branches. And now we'll move to the independent branches. Independent branches means the branches will maintain their books of accounts on their own. Okay, head office will not be maintaining. So what branch will do is, branch will prepare its PB. Branch can also prepare its trading P&L, and this P&L number will be transferred to head office. Okay, so think of it like head office is the investor and branch is the company which has been started by the head office. So whatever the branch prefers, whatever the profit is there, what do we do? If, for example, you are preparing partnership account or if you are preparing sole proprietor's account, the profit and loss is transferred to the owner. So here the profit and loss will be transferred to the head office being the owner kind of a situation, scenario. That is one. Second is, if the head office wants, what head office can do is all the balances of the branch account books, those are incorporated into head office. Those are incorporated into head office. So head office will take or record all the sales and everything from the trial balance and close the books of the branch and prepare the P&L. What do I mean by that is, let us say branch trial balance has sales number, sales 10,000. One option is branch will prepare the P&L based on this and you will continue. The second option is this 10,000, what HO will do is HO will record sales of 10,000 and they will debit branch account. Basically, it's not a single entry. List of entries is passed like this together to incorporate the balances of branch account in the head office books. Okay. And in the next year again, with the assets and liabilities, the entry is reversed so that the branch can continue. Okay. The head office account in the branch books and branch account in head office books is maintained respectively or separately. So in the head office books, what will happen? For example, if goods have been sent to the branch by head office, you will debit the branch, you will credit goods sent to branch account. Why? Because branch is receiving. Same way, branch will maintain the opposite entry. If goods are returned, reverse entry. Branch expenses paid by the branch, head office has nothing to do with it. So no entry. Branch books, branch will say expenses to bank or cash. Branch expenses paid by head office. This is a typical adjustment which keeps on coming. Now, when branch expenses are paid by head office, what the head office will do is, it is not my expenses, it is branch expenses. So they will debit branch account. And branch books, they will debit expenses and credit head office account. Basically, head office becomes like a creditor. Then outside purchase made by branch, entry is not passed by head office. Sales affected by the branch, no entry. So then you just now showed that entry, that we are incorporating. That is when you're finally completed the balance and incorporating that balance into the head office books. Okay, that is when you will use it. Just a moment. The screen. That is when you will, move it. Okay. Then payment, if at all, is made by head office for the purchase made by the branch. Means head office has made some payment on behalf of the branch. So you will debit branch, credit bank. What will the branch do? For the branch, head office has settled the creditor. So you will debit the creditor, credit head office. Same way, asset purchased by the branch, no entry. Asset purchased by the branch, but asset is retained in head office books. This is one typical adjustment which again, comes. What does that mean? Asset is purchased by the branch. Asset is screen is not visible. What happened? Just a moment. Is it visible now? Okay. So I'll repeat this part. Asset payment by head office for purchase made by the branch. Who is making the payment? Head office. Head office will say to bank. Whom will they debit? We are making on payment on behalf of the branch, so we will debit the branch. Okay. Then if asset is purchased by the branch but retained in head office books, means what? Asset is purchased by the branch. Payment has been made by the branch, but asset account is maintained at head office. Possible? Yes, possible. In that case, what the head office will do is, in the head office book, they will say, we have an asset at the branch. So we'll debit the branch account. We have an asset at the branch, so we will debit the branch account. Then, how will we settle, or what will be the credit entry? See, if I had purchased, if the head office had purchased, the head office would have said to creditor. But head office has not purchased. Who has made the payment? Branch has made the payment. So we have to pay that amount to the branch. So we will credit the branch account. In the branch account, you will have head office debit to bank. Now, why head office debit? I have transferred the asset to head office. So I will debit the head office account and I have made the payment by bank. I will transfer. depreciation on this asset purchased. It is an expense. Expense for whom? For the branch. So branch will say depreciation account debit to head office. Why to head office? Because depreciation is being incurred, or you can think of it that I have transferred the asset to head office. So let us say 1,000. Now I'm recovering some amount from that head office. Let us say 100, depreciation 100 to head office 100. Here branch account 100 to branch asset 100. Here branch asset 1,000. So ultimately branch asset 1,000 minus 100 will be recorded at 900. Okay. Remittances by head office to branch. If I have made the money, paid the money, branch to bank. Okay. Transfer of goods from one branch to another, generally not tested, but still, if I'm transferring from one branch account to another branch account, whichever branch is receiving, debit the receiver, credit the giver. Debit the receiver, credit the giver. Okay, so these are some entries. Reconciliation items will come when we solve the questions directly. Okay, there is nothing specific for us to understand. Okay, so let us see this. Give journal entries in the books of an independent branch to rectify or adjust the following. So basically what you're saying, you have to pass the necessary journal entries to rectify. Rectify means basically we are passing the entry. We are passing the entry in the books, or we are adjusting the entry. Branch paid rupees 5,000 as salary to head office supervisor, but the amount paid by the branch has been debited to the salary account in the books of the branch. Now, when there is an error, if you remember how you rectified the entries at foundation level, perfect, no problem. If at all you have forgotten, what you have to do is, what is the correct entry? What is the wrong entry? What is the correct entry? Branch paid 5,000 as salary to head office supervisor. So we are incurring the expenses on behalf of head office. So what we will do, it is head office expense. No, we will debit head office to, we have paid 5,000. We should have done to bank 5,000. 5,000. But what did we do? We debited to salary account in the books of bank. This is the correct entry. Wrong entry is salary to bank. So basically bank and bank is correct. Salary we have debited by 5,000. That is not our expense. That is the expense of head office. So debit head office. The correct rectification entry will be head office account debit to salaries account 5,000. 5,000. Okay. Then asset purchased by branch 25,000, but asset account was retained in head office books. Where do we need to pass? In the books of the branch. I purchased head office. I gave the head office to the, I purchased asset. I gave the asset to head office. I've given the asset to head office, so debit the head office. Credit bank or liability, because we have paid the money. So think of it. The branch bought this asset, this is the asset. This asset has been given to head office. So debit head office. We paid money to the supplier, so credit the bank. Okay. Then a remittance of 8,000 sent by branch has not been received by head office. Money has been sent by branch. It has not been received by head office. Okay. So if head office has not received, do I need to worry about it? I don't need to worry about it. Sir, do we need to pass a fresh entry? See, here they have said rectify or adjust. I have sent the money. It is not an error from my side. I don't need to make any adjustment. Okay. So in the next part, there is no entry in the branch books. There is no entry in the branch books. Then head office collected 25,000 directly from the customer of the branch, but fails to give intimation to the branch. Head office collected 25,000. Who collected? Head office. From whom? A customer. Whose customer? Branch customer. So when I receive money from branch, what should I do? I should credit the customer. What will I debit? Can the branch debit cash account? It cannot, because cash has not been received. Who received the money? Head office. So I will say I have to collect that amount from the head office. So I would debit head office and credit the debtors account. Typically, you get questions on passing these kind of entries in the examination. So try to be comfortable with passing these kind of entries, which will actually help you to score good marks. Right? Then remittance of funds by HO to branch not entered in branch books. Who has sent? Head office has sent. To whom? Branch. You have received the money. Branch has received the money. So branch will debit branch bank account, credit head office. Any question in these entries? Any questions? Head office will record. For remittance in transit, head office will record. Head office will say cash to branch. Okay. Now, one suggestion for this particular chapter to all of you is that, see, there are a lot of theory and questions and all of that. Get familiar with the questions which are asked in the examination. Don't overburden yourself with 25 different types of questions from this particular chapter. Okay, that is what will help you to handle this chapter in the examination. Otherwise, it is really I would say a painful chapter, because too many varieties of questions and all being asked. So you should ensure that you are doing it appropriately. Okay. Then incorporation of branch balance in head office books. Now, what is this? This basically, I told you earlier, you can prepare standalone balance sheet and P&L of the branch and transfer that balance to the head office account, or prepare consolidated statement of branch and P&L, branch and HNO, head office. What does that mean? If I'm preparing standalone P&L, branch will prepare P&L account. The net profit is transferred to head office. Okay. So net profit, whatever is earned, is transferred to head office. Like you transfer to capital account, here you will transfer to head office. So head office will say profit, you will debit the branch and credit the P&L. Sir, why are we debiting branch? See, if the branch has earned profit, branch has to remit that profit to me. Branch has to remit that profit to me. Okay. So that amount I'll debit to branch and credit to the. What will branch do? Branch will debit P&L, credit head office. That is when separate P&L and balance sheet is prepared. Sometimes what they do is they prepare a consolidated P&L and balance sheet. Now, consolidated P&L and balance sheet basically means transfer all the ledger balances from the branch to the head office and then prepare a combined P&L. Okay. Now, when you incorporate balances, it is head office to all the assets, liabilities to all the assets. That is how it is, incorporating the asset and liability balance. And even revenue accounts are transferred to head office, and head office will incorporate. So what will happen is you have sales as credit balance. So what you will do, you will debit sales and you will say to head office. In effect, the net impact will be that all the balances have been transferred. Okay. Or sometimes what they may do, they may transfer only P&L is prepared, only balance sheet items needs to be transferred. That is also possible. Let's look at this question. Affix of Kolkata has a branch at Delhi to which goods are supplied from Kolkata, but the cost thereof is not recorded in the head office books. They have a branch at Delhi. Goods are supplied from Kolkata. Okay, branch is at Delhi. Cost is not recorded in the head office books. On 31st March, branch balance sheet was as follows. Okay, creditors balance, head office. Head office balance means branch is saying we have to pay head office 168. If you are getting confused, think of this as a capital account. Debtors balance 2 lakhs. Whose balance? Branch balance. Building extension account closed by transfer to head office means there was some building account. Now that has been transferred to head office. Cash at bank 8,000. During the 6 months, so this is as on 31st March, ended 30th September, the following transactions took place at Delhi. Delhi is our branch. Sales, purchases, wages, manager salary, collections, discount allowed. Salaries, including advance, general expenses, fire insurance for 1 year. Now, when they say advance, 6,400 is not expense. 6,400 out of this, 2,000 is advance salary and 4,400 is expense. Discount earned, cash paid to creditors, building account, further payment made, cash in hand 1,600, cash in bank 28,000. Set out the head office account in Delhi books and the branch balance sheet as on 30th September. Also give entries in the Delhi books. So, prepare head office account in the Delhi books, prepare head office ledger. Then branch balance sheet as on 30th September, prepare the branch balance sheet. And also give the journal entries in Delhi books. Now, when we say journal entries in Delhi books, basically what we are saying is transfer. So here, all the journal entries in Delhi books, whatever we're preparing, that will transfer the balances, whatever are the balances, to the head office account. Before that, we also, what we need to do is, if there are any adjustment entries pending or closing entries pending means if there is some adjustment to be done, prepaid expenses, outstanding expenses, and all of that, that also has to be adjusted. So first, salaries including advance of 2,000. That is not my salary expense. So I will debit salary advance account and credit salaries 2,000. Ultimately, All the amounts will be transferred, or balance sheet will be retained and revenue accounts will be transferred. But we have to record the expense correctly. So 2000 is credited. Same way, fire insurance is paid for 3000, paid to 3200 for the full year. Means 1600 for half year is only my expense. Balance is my prepaid expense to fire insurance 1600. Okay. Then, okay, all of that is done. These are all expenses and collections and all. Now, transfer of amounts to head office. Now, when we transfer the amounts to head office, the simple principle that you can keep in mind is that if there is an expense account, you will credit the expense account and you will debit the head office account. So, head office account, you will debit and transfer all the expenses account. Purchases, wages, salaries, general expenses, fire insurance, manager salary, discount allowed. All the expenses will be transferred. So, will we transfer balance sheet items? No, because here they have said branch balance sheet as on 30th September. So balance sheet will be maintained with the branch only. Balance sheet will be maintained with the branch only. So wherever you see an expense, what are the expenses? Purchases, wages, manager salary, discounts allowed, salaries, general expenses, fire insurance, discount on design income. Okay, yeah, that is transfer. Then whatever is the income, sales account and discount earned, you will debit the account and you will transfer to head office. Then building account, they have said they will transfer in the balance sheet. If you see, transfer to head office by closing the account. So you'll close the account. So building extension account also will be closed by transferring to head office. So debit head office, credit building account, 4,000. Okay. Now in head office account, how will the ledger appear? In head office account, you will have head office account debit 88,400. Head office account credit 241,200. And again, head office account debit 4,000. These are coming from the journal entries. Then opening balance is given in the question that you will transfer. Then whatever amount has been remitted, here if you see, remittance to head office 38,400. If I have paid some amount to head office, I will debit head office and I will credit bank. So head office to bank 38,000. Right? Yeah, 38,400. And balance carried down 278,400. Okay, that is how we will do. Then when you prepare the balance sheet, they have given us the information of cash in hand is given, cash at bank is given, debtors account is not given, creditors account is not given. That we can prepare. Okay, so cash account opening balance is available and cash in bank closing balance is available. Then you can prepare this account, the cash and bank account, to ensure that all items are recorded. Nothing is missed out. If something is missed out, then that balancing figure you have to assume something. Okay. Now here, let us see one by one. The transactions, you have sales of 240. Okay. Now they have not given a split of cash sales and credit sales, but because we have customers, because we have debtors balance 2 lakhs and we have sales of 240 and then we have collections from debtors, we can assume all the sales are on credit basis. So what you will do, you will prepare a debtors account as well. Balance brought down, sales made, cash collected, and closing balance is not there. Discount allowed is there. Correct. Discount allowed is there 8,000. So in the debtors account, you'll credit discount allowed and this balance carried on 272. That will be taken to the balance sheet as sundry debtors. Okay. Same way, prepare the cash account, wages, expense, salaries. Now salaries here is total. Total means total amount paid. Insurance also total 1,600 plus 1,600 paid because we have paid 3,200. Expense is only 1,600, but we have paid 3,200. Then general expenses, remittance to head office, manager's salary, creditors payment, building account expenses, and collection from debtor. So this is actually matched. Okay, there is nothing to bother. Then creditors account, like we prepare debtors account, you can prepare the creditors account as well. Discount earned is given, cash paid to creditors given, so you can prepare those accounts, right? So, sir, if we had not prepared the creditors account and debtors account, then you would not have been able to prepare the final balance sheet. Cash account could be have skipped, you could have skipped, but sometimes what happens is there is hidden information. There could be hidden information. So don't take that chance. Okay. Now in the balance sheet, you have debtors, salary advance, prepaid expense, cash in and cash at bank, creditors, and head office account. Now you see, had we just think of it logically, had we prepared P&L, this head office account balance would have been same because all the expense and income we have directly transferred. Here, if you see, all the expenses and income we have independently transferred. So, had you not transferred and prepared the P&L, so what is the P&L? So, P&L, if you say expense is 88,400 and income is 241,200, the balance is income. So, you can take head office opening balance, add profit earned during the period, less any amount transferred to head office, less building account transfer to head office. If you do that, you will get the same number. Okay. Is that clear? Any questions? Clear? Okay. Now, next one. Ring Bell Limited has a branch at Bombay. Sometimes they ask, we will come back to the questions also. Sometimes they ask for incorporation. Okay. Generally, not 90%, 70% will be stock and debtors method. 10% chances that these entries are asked in the examination. Okay. Following is the trial balance. Okay, trial balance of head office is given, branch trial balance is given. Now here if you see fixed asset, profit, stock, debtors, cash balance, head office, current account. So profit is already calculated. You don't need to calculate. Difference between the balance of current account in the two set of books is accounted for as follows. So here they are saying 133,710 and here they are saying 129,010. There is a difference. Cash remitted by branch on 31st December but received by head office on 1st of January. Means branch sent the cash. Head office has not received. Branch sent the cash. Head office has not received. What will head office do? Head office will say, I have not received cash, so I cannot debit cash. Head office can say cash in transit to branch account because branch is already sent. Okay. So cash in transit to branch account 3,000. Then stock stolen in transit from head office and charged to branch by the head office, but not credited to head office in the branch books as the branch manager declined to admit any liability not covered by insurance 17. So basically what happened, there was a loss in transit. Now whenever there is a loss in transit, the stock which has been lost, we have sent the stock is lost by the transit because lost in transit, and the branch manager says I will not admit this liability. But if you technically see, the stock has been sent to the branch. There is a loss. That loss can be subsequently accounted for. The loss can be subsequently accounted for in the P&L and all of that. But finally, there is a loss. So that loss has to be accounted for. The loss has to be accounted for. Now, who will account for the loss? The loss is to be considered in the branch account, right? So how much is the loss? 1,700. So what we'll say? Branch, you have to pay the loss of 1,700 and there is a loss by theft 1,700. So that will account for the second scenario where there is a loss in transit and the head office has charged. Okay. Right. Now, after we have incorporated this, the next thing they have said is incorporate the trial balance. Now, how will we incorporate the trial balance? All the assets, fixed asset, stock, debtors, creditors, these have debit balance. We will credit them. And whatever has credit balance, we will debit them. So, P&L transfer 31,700. This number. Then fixed asset, stock, debtors, cash transferred, current creditors transfer. Are we clear? Okay. Then you can prepare the branch current account and P&L account for 21. Now, how do you prepare the P&L account? Profit and loss account, what we have. $31,700 is what has been transferred from the branch and 25,310 is what is there in the head office. So what the head office will say is This is my opening P&L 25,310. That's my opening P&L. Okay. Then profit, current year profit 52,200. Profit 52,200. Branch profit 31,700, which has been transferred. 31,700 by branch. Then there is a loss by theft, which the branch had not agreed to, take the burden. So we had credited the branch account and we have borne that loss. 1,700, balance carried down 107,150. And the branch current account, once you prepare, all the balances have been transferred and the account would be showing a zero balance because all the assets and liabilities have been transferred. Next year, when we reopen, what we will do is we'll again give back the assets and liabilities of the branch, and the branch will continue to maintain the accounts. Okay. Now, this question, 10 marks question, just now what we had discussed from the study material was asked for 10 marks here. Okay. Not repeatedly asked, but asked. Then this one again, same thing, similar thing that we had done. Again, passing journal entries, and here a separate trading and P&L account is required to be prepared. That profit has to be transferred to head office. So this will have a look at this question quickly, and then we'll move to the further questions. Okay. Now here, if you see, on 31st March, Chennai branch submits the following trial balance to its head office at Lucknow. Furniture, depreciation, salaries, rent, advertising, postage, sundry, office expense, stock, goods received, debtors, cash, carriage inputs. Credit balances, outstanding expenses, goods return, sales, head office. So this is a matched trial balance. Stock on 31st March was valued at 62 lakhs. On 29th March, head office dispatched goods costing 10 lakhs to its branch. Branch did not receive these goods before 1st April. Hence, the figure of goods received from head office does not include these goods. Also, the head office has charged branch 1 lakh for centralized services for which the branch has not passed the entry. Now, here what has happened is branch has not received the goods. Branch has not received the goods. Head office has sent. Now, branch, what the branch should do is head office has sent the goods. Those goods now belong to the branch. So, what the branch will say is there are goods in transit to head office 10. Now, this goods in transit is basically a part of your closing stock as well. Okay. Then the branch, the head office has said 1 lakh of common expenses. Head office has said 1 lakh of common expenses that has to be borne by the branch. So you'll debit expenses, credit head office 1 lakh, 1 lakh. Accordingly, the head office balance will undergo a change. Okay. Right. Then once that is done, stock on 1st of April 60. So what they have asked us to do, they have asked us to pass journal entries to make the adjustments we have done, and prepare final accounts of the branch and the balance sheet of the branch. So we have to prepare the final accounts of the branch and the balance sheet of the branch. Now, to prepare the final accounts, first opening stock 60. So 60 you will pass it to the opening stock side. Goods received from head office 288. This also you will pass. Now, one thing that you have to keep in mind is that this 288 goods received from head office does not include the amount that is still in transit. Okay. So do we include, not include? If you include goods in transit here, then you have to include in closing stock. If you don't include, then you can directly take the closing stock of 62 lakhs. Both of them will give the same answer. Okay. So opening stock 60, head office is goods sent 288, sales closing stock. Then there is a return, you will subtract that. Then there is a carriage inward as given in the question 72. Then gross profit, pass all the other related expenses. Okay, this is a simple thing. You can do it on your own. Basically, what we need to do from the trial balance, all the expenses like depreciation, salaries, rent, advertising, telephone, sundry expenses, all of that are posted. Okay, including that extra head office expense which has been charged. And then you will get net profit 24. Net profit 24. Where will we transfer this net profit? To head office. We'll transfer this to head office. Now in the balance sheet, head office account is 80 plus goods in transit 10 plus stock expenses plus net profit. This is the total. Stock is 62 and goods in transit is here. So you see the double impact. Here I have taken goods in transit and also I have increased the head office balance. Okay. Once I receive the goods, if I include there, Here, what I can do is, I can say this is head office plus in transit 298, and here closing stock can be 72. The final impact will be the same. Any questions? Now, one more thing, what you have to, understand is, especially when there is an, independent branch, the P&L that you have to prepare. Okay. The one question which arises is, sir, should we take, opening stock at what value? Should we take at the invoice price? So for example, in this question, the Delhi branch deals with the goods from head office, but also buys auxiliary goods and deals with them. They do not prepare any profit and loss account, but close all the accounts to head office at the end of the year and open them afresh on the basis of advice from the head office. So basically, head office is preparing. Who is preparing? Head office is preparing. Okay, here, head office is preparing. If head office is preparing, what head office will typically do is, all the accounts, the goods sent and all of that, they will account for it at cost only, if the head office is preparing. If the branch was preparing, or if the head office was preparing as per the branch books, and we had to account for stock reserve and all of that, that is a different scenario. But if the head office is preparing the P&L and all of that of the branch, then, for example, if the opening stock 4,000 at invoice price, head office knows it is not 4,000, but head office knows it is at 3,200, and it does it accordingly. Sir, if you don't do this, the other thing what you can do is, you can take 4,000 here and 800 you can show it as a reserve. Okay. Same way, goods sent 50,000, you can show 50,000 here and 10,000 as reserve here, or you can show the net amount balance as well. Okay. Now, having discussed the independent branches, the dependent branches, more weightage I would again say is towards dependent branches, where you will get the stock and debtors method maximum number of time. Practice once again so that you're clear on how the accounts are to be handled. Then a lot of time there is a good focus on foreign branches as well. Now, what are foreign branches? Branches which are not in our country, or branches which prepare their financial statement in a different currency. For example, we prepare everything based on INR. The foreign branches may be preparing everything on dollar. Now, as far as accounting for foreign branches are concerned, what we need to be careful about is, the trial balance will be given in dollars. We have to convert that in INR. What should be the exchange rate? That is the key question. That is the key question. Once you know what is the exchange rate that is to be applied, then there is no problem. There is no problem. Okay. Now, foreign branches are categorized into integral foreign operations and non-integral foreign operations. Now, what is the difference between integral foreign operations and non-integral foreign operations? Integral foreign operation is like just an extension of our branch. Integral foreign operation is like just our extension of our business, integral part of our business. Okay. So it is like, what will happen is, typically in case of integral foreign operations, head office will send the goods to the branch, then the branch will make the sales. Whatever amount is collected is sent back to the head office. Generally, they will not purchase from outside. Integral foreign operations rely on the head office for all their finances. Okay. So that is what is called an integral foreign operation. Questions will generally mention. If they don't mention, then you have to see the information. If they have not purchased anything from outside, you can assume it is an integral foreign operation. But if they have purchased from outside, then it can be a non-integral foreign operation. Okay. So that is how you have to make the distinction. How much of transaction are they having with the head office? And how much of the transactions are they having independently? So that is what will decide what is integral operation and what is non-integral operation. Okay. Now, coming to the accounting part. When we say integral foreign operation, it is just my extension. It is like my hand which is attached to my body. Okay. So when you have integral foreign operations, all transactions will be translated at the rate prevailing on the date of transaction. What is the meaning of that? Means, if a sale has happened on 1st of January, you will record that transaction as if it is made by the head office on 1st of January. So if on 1st of January, sales of $1,000 have been made, okay, branch will record $1,000. When head office has to incorporate the sales in its books, it will say $1,000 into, let us say, 85, the rate prevailing on the date of transaction. Now, will we have individual rates in the examination? No, because There will be so many transactions. So look for average rate. For the period, what was the rate? At that average rate, we will translate everything to the, okay. So weekly or monthly rate is permitted if there are no significant variations. From examination point of view, we will have the average rate. Okay, that is as far as the transactions are concerned. Then translation at the balance sheet date. That is for individual transaction. First, monetary items. Now, what are these monetary items? Monetary items are something like cash and cash equivalent, amounts which are determined in terms of money, sundry debtors, sundry creditors, and all of those things. Always remember, monetary items are closing rate. We have understood this in accounting standard 11 as well. Yes, we have understood this in accounting standard 11, so no problem. Then, so monetary items is basically for a balance sheet. Everything will happen at the closing rate. Non-monetary items. Non-monetary items. What are these non-monetary items? Like fixed asset. Now, how do I value these non-monetary items? Let us say I have fixed asset of $1,000. At what rate should I convert? So what you should do is, because I am an integral foreign operation, I should use the rate on the date of transaction. I'm repeating once again. Because I am an integral foreign operation, I should use the rate on the date of transaction. So then why did we not use this for monetary items? See, monetary items as per accounting standard 11 anyways has to be restated. Monetary items as per accounting standard 11 anyways has to be restated. So I will directly take the closing rate. But for non-monetary items, I don't need restatement. So I will take the rate on the date of purchase of the asset. The rate on the date of purchase of the asset. Okay. Depreciation will also be calculated according to that rate T. So if I purchased fixed asset when the dollar was 50, this is the value I will consider for calculation of the closing balance and depreciation. Okay. But we have one more model called revaluation model. As far as revaluation model is concerned, take the fair value date and rate of that particular date for calculation of value and subsequent depreciation. All right. So monetary items, closing rate. Non-monetary items, you will consider the exchange rate on the date of purchase, and if we are doing fair valuation, you will consider the fair value date, that particular rate. So basically, you keep in mind it is rate of date of transaction, except monetary items which are taken at closing. Then cost of inventories is translated at the exchange rate that existed when the cost of inventory was incurred, and realizable value is translated applying the exchange rate when the realizable value is determined. What is that? This again is basically your transaction date. Inventory, when you purchase the transaction or when you purchase the inventory, what was the rate on the date of transaction? The rate on the date of transaction, that is the rate you will consider for the purpose of valuing the inventory. If you are determining NRV, you will take the rate of NRV. Then, this is very important, exchange difference should be charged to the P&L. Exchange difference should be charged to the P&L. So quickly, let us recap. Number one, all transactions at the date of transaction rate. All transaction at the rate on date of transaction. Look for average rate in the examination. Balance sheet items, monetary items, closing rate. Fixed assets, date of transaction. If revaluation model is followed, rate on revaluation date. Inventory cost, date of transaction or weighted average rate. NRV, the date of NRV. Exchange difference will be taken to P. Okay. If you get a question on integral foreign operation, 10 out of 10 should be in your pocket. No question asked. Right? Then, how about non-integral foreign operation? These are more like independent. They are doing things on their own. Now, it is simpler to translate because for non-integral foreign operation, you will transfer the balance sheet items at closing rate only because it is doing independently. It is not related to me. So for me, what is important is on the date of balance sheet, what is the valuation? I will take that and I'll incorporate. But in case of integral, it is a part of my body. So I should treat it as if I have done the accounting. Okay. Income and expenses, actual exchange rate on the date of transaction or average rate. Resulting exchange rate difference should be accumulated in foreign currency translation reserve until the disposal in the foreign operation. Okay. So this is how we will do the accounting. Any question? If you are comparing cost and NRV, do we compare in the foreign? First, you'll compare in foreign currency and then you'll bring it to NRV. See, it is being done by the branch. And that value of inventory is in that particular currency. Then we have this classification integral to non-integral. Integral to non-integral. If at all there is an integral foreign operation and now we have decided that it will be non-integral, then what you will do is from the date of translation till the date it was integral, exchange difference will be taken to P&L. Subsequent to that, any exchange difference will be accumulated in foreign currency translation reserve. If non-integral to integral, then from the date of change, you will change the translation procedure. Translated amount of non-monetary item is treated as historical cost. Basically, whatever was the amount of non-monetary items appearing in the balance sheet will now become our cost. And the exchange difference in the foreign currency translation reserve will remain there till the time you dispose. Once you dispose, it will be transferred to. Okay. Now, on 31st, let's look at this question. 31st December, the following balances appeared in the books of Chennai branch of an English firm having head office in New York. Ulta question. Normally, we see Indian company, foreign branch. Here, foreign head office, Indian branch. Foreign head office, Indian branch. Stock, 234. Purchase and sales, data, data, receivable, payable, salary, wages, rents and furniture, bank, New York account. New York account is your head office. Stock on 31st December was 637. Branch account in your book showed a debit balance of 13,400 on 31st December and furniture appeared in the head office books at 1750. The rate of exchange of $1 on 31st December was 52. On 31st December of 2002 was 51. Average rate was 50. So this average rate will be used wherever we need the date of transaction. Okay. Prepare the head office books Prepare in the head office books the P&L account and the balance sheet of the branch, assuming integral foreign operation. Integral foreign operation means what? Integral foreign operation means all the transaction average rate. So, purchase and sales, these transactions, you will take average rate. Debtors and creditors, monetary item, which rate? Closing rate. Bills receivable payable, closing rate. Salary and wages, transaction, average rate. Rent rates and taxes, average rate. Furniture. Now, this furniture, we have to take the historical cost. Don't take average rate. So, how do we get the historical cost? Here, they have said furniture appeared in the head office book at $1,750, right? So, that can be a reference point because that gives us the amount, right? Bank account, monetary item, closing rate. New York account, head office account, that will be, okay? Now, opening stock. Opening stock, this was from what? The previous balance sheet, right? Stock on 1st of January of year 2. What they have said? The exchange rate was 52. So when we have valued that inventory, what was the rate? 52. So when you have to value it now, you will consider 52. Purchase and sales, average rate. Debtors and creditor, closing rate because monetary items. Bills receivable, bills payable, closing rate. Salary and wages, average rate. Rent rates and taxes, average rate. Now, furniture, directly we know the dollar number. You will take the dollar, historical cost. Bank account, closing rate. New York account, have they given us the number? Branch account in New York books showed a debit balance of 13,400 on 31st December. So that is our closing balance. No need to use this and convert. Whatever the branch account balance that appears in the books of the head office, will consider that. That is as it is 13,400. Now, please be careful. The rates when you apply, rate of $1 is 52. Rupee has to be converted to dollar. 52 to 1. So this represents 52. We have to make it 1. Means we have to reduce. So we have to divide. That is how we can remember. So don't multiply. You have to just divide. Once you divide, you will get the balances. All right. Now these balances, whatever is the difference, it is the exchange translation loss. Where will we take this? To the P? Because it is integral foreign operation. Okay. Now, when you prepare the P&L and balance sheet, it is very simple. Sales, closing stock, why 51? Because this is the date on which the rate has been decided. The closing stock decided on this date. Sir, can it not be average cost basis? Because we do not know. We do not know, because if you see the average cost, transactions and all of that, you have opening stock, you have direct transactions during the period. So assume it is valued on this date using the rate, you are taking that particular rate. Opening stock, purchases, gross profit, then all these expenses, including exchange translation not, you will get the profit of 17,500. Now, in the balance sheet, 1750, the furniture value, closing stock, 12,500, debtors, receivables, this cash, creditors, bills payable, head office account, 13,400, that is the balance that you will take. Add net profit for the period, this is the closing balance. Very simple, highly scoring chapter. Very simple, highly scoring chapter. Clear? Okay. Now, let us see a question from the examination. Simple 4-mark question, but it is lengthy. Okay, it's lengthy. Smart Limited is an Indian company and has its branch at New York. The following balances in respect of Smart Limited are provided. This 4-mark question. By the time you read it, it will take 5 to 6 minutes. Debit balances in dollars, expenditure 1,03,000. This is in dollars. Cash and bank balances, debtors, fixed asset gross value. Rate of depreciation is 20%. Inventory, 2 types of inventory. Credit balances, income, creditors, HO control account. HO control account is basically head office account. This is from the branch. Following additional information is provided. What is the information? Average exchange rate during the above financial year is 56. Average is 56. Fixed assets were purchased when the exchange rate was 55. Fixed assets were purchased when it was 55. Now, this is relevant only if it is integral foreign operation. What does the question say? You are required to show how it will be reflected if it is an integral foreign operation. Means, this fixed asset 34,200, you will multiply it by 56 to calculate the amount. Closing exchange rate on the reporting date is 58. This will be used for what? Monetary items. Stock item B is valued at cost, purchased when the exchange rate was 56.5. Net realizable value is 28,285, 2,85,000. Now, they should have given in dollar terms, but they have given in rupee term. Okay, we'll consider the rupee term. Stock item Q was carried at NRV of 1035, but it cost in USD was 1065. It was purchased when the exchange rate was $1 is 53. So second item is at NRV. So we'll take the NRV rate. The first item is at cost. We'll take the costing calculation. Branch control account is 266. So this branch control account, whatever you get, that you can directly take it here. 266, 265. Okay. Now, inventory P 5520 multiplied by 56.5. 5520 multiplied by 56.5, we get 3,11,880. We get 3,11,880. NRV, they have said 285. We cannot take it more than NRV. So we'll take at 285 only. So we'll take it at 285. Okay. Then second, see, the thing in this question is NRV, when you say, it has to be based on that New York place. Okay. It cannot be based on INR. I am selling at New York. So I should take NRV as per that. But because this I cannot show at more than 285, I'm restricting it to 285. Q was carried at NRV of 1035. Cost is 1065. So cost is 1065. NRV itself, they have said 1035. So NRV is lower. When did we calculate NRV? NRV on the balance sheet date. Okay. Purchase rate is 53, but closing rate is how much? Closing rate is 58. So 1035 is the NRV into 58. 1035 into 58, we get 60030, and cost 1065 into 53, that is 1065 into 53, we get 56445. So cost is lower, so we'll value it at cost. Okay, value it at cost. And one more thing, it is integral foreign operation. So I am recording the transaction as if it is 56,445 for me, because I have purchased inventory at this particular rate. Okay. Then Expenditure will take the average, cash and bank will take the closing rate, debtors will take the closing rate, fixed asset, the date of purchase. Depreciation will be based on that particular value. Okay, same value. Then income average rate, creditors closing rate, control account directly will take, difference will be taken to the P. Clear? See, now if you ask me for 4 marks, this is a long question. Okay, if you have time, that is when you have to do it. 8 marks question. Mrs. Rani and Company has head office at Singapore and branch at Delhi. Head office Singapore, branch at Delhi. Delhi branch is an integral foreign operation of Rani and Company, furnishes you with the following trial balance. Again, stock, opening balance, purchases and sales. Purchase and sales, you will take which rate? You will take the average rate. Sundry debtors, creditors, closing rate. Monetary items, closing rate. If it is NIFO, everything is at closing rate and transaction is at the average rate. Bill of exchange, closing rate. Wages, average rate. This is at average rate, average rate. Computers, you will see what is the date of purchase. Bank balance, closing rate. Singapore office account 3040. Okay. Computers were acquired from a remittance of Singapore dollar 12,000 received from Singapore head office and paid to the suppliers. Depreciate computers at the rate of 40%. So the cost itself is $12,000. So directly what you can do is fixed asset. You can directly get $12,000 because that is the amount what it has been incurred in their original currency terms. That is in the head office terms. Depreciate computers at the rate of 40% for there. So on this 12,000, take 40% and depreciate. Closing stock of Delhi was 1560 on 31st March of 2019. So that is the closing stock. So closing stock 1560 and we'll take the closing rate of 31st of March 52. Okay. Then now you may have a doubt, sir, why don't we take the average rate? As I told you, the closing inventory comprises of multiple different parameters. Unless they tell us the details of the various transaction dates, we cannot do it, and hence we have taken the closing rate directly. Assuming that is the date on which we have determined the NRV. Okay, then opening stock 600 using the opening stock rate, we'll convert that into the Singapore dollars. So that is basically 600 divided by 50. 600 divided by 50. Then you have wages, rent, sundry expenses, all of that you can directly convert using the respective rate. Depreciation directly at 40%. Average exchange rate for the year is 51. Given I've taken. Conversion shall be made up of this 2 decimal currency. Delhi branch account showed a debit balance of Singapore dollar 59,897 on 31st March in the head office books, and there is no item pending for reconciliation. So this becomes my closing balance of head office. And whatever is the loss, that loss you will take and you will transfer it to the head office account. Okay. Now here, one more thing what we should be doing actually is to convert this into dollars and see if there are any exchange differences. They have not done in this question, but you should do that in the examination. First, convert this trial balance using the Singapore rate and then go ahead and prepare the P&L and the balance sheet of the branch. Are we clear? So the thing that I'm mentioning you here is, if you convert this, there will be an exchange loss or gain that has to be accounted for. Okay. Now, if I don't account for it, it may get clubbed with this loss. My balance sheet will tally. Balance sheet tallying is not the problem. But here, exchange loss part is missing. Or it may be possible that there is no exchange loss. That is also possible. So we have to first take the trial balance, convert the trial balance into our currency, into the Singapore currency, see if there is any difference. That difference should be captured separately in the P&L. Okay. Oh, they have done it here. So there is no difference. I thought this is the answer, but they have done it here. This is first you should be doing. There is no difference and hence there is no loss or gain. Now, see this. How many marks? 8 marks. 8 marks means we have 8 marks into, if I take 1.8, but questions are lengthy, so that becomes difficult. So you have rough 1.8 into 8. If I do, you have roughly about 15 minutes. In 15 minutes, you have to prepare this. Then you have to, after you prepare this will not take much of time. But typically you see is a lengthy question. Time management is pretty crucial. Okay, so this we have done, this we have already discussed. This you can do it on your own, straightforward, nothing is complicated. Yeah. Remaining questions you can now practice. Okay, hope after this elaborate discussion, you are you are able to understand it better as far as the branch accounting is concerned. Any questions you feel that is tricky? It's more about taking the information, plotting it in the format. As simple as that. Of course, I'll say it is simple, but when it comes in the examination, it can actually be tricky. So practice, look at the format, and as I told you, focus will be on stock and debtors method. That will be the large focus for you. Trading P&L will be the second part, which you will be better able to handle. Revise the journal entries. Sometimes they will ask the journal entries also. And the last one was the integral monitoring. In the first question, inventory valuation, cost is 56.5. So if you take 5520 cost, it becomes 311280, but NRV is 285 as given in the question. So I cannot take it beyond NRV. Now, technically speaking, this is not how in the real life scenario it would work, because I will be able to realize it at the foreign branch level. Okay, because I am running a foreign branch. But because it is an integral operation, if I was to record in my books, see, the thing is, in case of integral foreign operation, it is as if it is my own books. In my own books, what is the cost of inventory? 311,880. What is the net realizable value? 285. So I will measure it at 285. In the second scenario, what has happened? In the second scenario, cost is 1035 at 53. Cost is 56,445. I will record in my books 56,445. So I have to continue to show it at the lower value, which is the cost. I cannot show it at a higher value. Clear, Vishnu? In non-integral, you will as it is take the closing balance and convert. So whatever the non-integral branch has done, the valuation, that value as it is we will take. Okay. Any more questions? Okay. All right. So that concludes branch accounting, right? Tomorrow and day after we don't have class. We will have class on Saturday. Saturday we will start consolidation. Okay. Sure. Thanks a lot. Bye.